Markets are really just human emotion, and right now, that emotion is pretty conflicted. We've got Bitcoin sitting in this uncomfortable spot where nobody's really sure what comes next. Let's talk about what's actually happening here. We wicked through $78,000 recently, which was a proper liquidity sweep that took out a bunch of long stops. That move liquidated 154,000 traders in 24 hours. Pretty brutal stuff. But here's the thing. Some traders are calling this whole dip a bear trap. They think we're setting up for a bounce. The macro picture isn't helping, though. Bond yields just hit 12-month highs. PPI came in at 6%, and inflation's running hot because of all the global tensions. That's not exactly the environment where risk assets like Bitcoin thrive. We're even seeing rate hike expectations getting priced back in, which is wild considering where we were just months ago. What really caught my attention is the ETF flows. Spot Bitcoin ETFs just bled $1 billion in a week. That's after a 6-week inflow streak that brought in $3.4 billion. BlackRock's IBIT alone shed $136 million. The money's rotating into AI stocks, apparently. Classic institutional behavior, chasing the next shiny thing. On the charts, $82,000 keeps acting like a brick wall. Bitcoin's failed multiple times to flip that level into support. And that's telling you something about the underlying demand. We're basically chopped up between $76,000 and $82,000 right now. If we can't decisively break $82,000 and $78,000 starts offering resistance instead of support, then we're looking at that $76,000 level as the next stop. But here's where it gets interesting. Exchange supply is at 8-year lows. Long-term holders aren't selling. The on-chain data shows this equilibrium of apathy, weak Coinbase demand, almost zero Binance sell pressure. That sounds like a volatility squeeze building up. The bears are pointing to something else, though. They're saying we haven't seen true capitulation volume yet. Some are throwing around targets as low as $42,800 to $45,000 if we get a deeper flush. That's Bitcoin power law model territory. For positioning, I'm watching two scenarios. If we flip $82,000 to solid support on the higher time frames, that's your breakout long setup around $82,500, targeting $84,000. But if $78,000 breaks convincingly and starts offering resistance, then you're looking at shorts around $77,800, targeting $76,000. The thing is, this market's all about patience right now. We need to see either institutional demand return to those ETFs or a decisive break of these key levels. Until then, we're just getting chopped up in this range. Take your time with this one.